All right. Today's SPY was up 1.2%, and we are starting to bounce from this level down here right around 410. And if we cannot break above 417 to about 420, we will be expecting a trip down towards the gap fill at 407. So it is still possible with this downtrend. We're only putting in lower highs and lower lows until we reverse the downtrend. Now, just a quick reminder, to reverse the downtrend, we need to see evidence of a higher low followed up by a higher high. And that's going to be our first evidence from the price that this downtrend is getting weaker, and we could be seeing a reversal into an uptrend. And then of course we will need to break the resistance trend line to confirm a bullish breakout. So remember, this is still a downtrend, which means if you're buying longs at support, you need to be selling at resistance, because we are likely heading lower while we are in this downtrend, because the path of least resistance in a downtrend is obviously going to be lower prices, and we still do have more downside targets we could reach before this thing hits a bottom and starts to reverse. Now, don't rule out the possibility that we're already hitting the bottom and starting to reverse, but we're going to need confirmation with the break above resistance at 417 and then 420. 420 will be a very strong resistance because that's the breakdown, and that's what got us in the risk off condition of lower highs and lower lows. And in order to get more bullish, we're going to need to break 420 and put in a higher low, and then break a higher high breakout, which is likely going to take us above 430. And then if we can do all of that, then the bulls will have a leg to stand on to continue to push higher towards the gap fills above, and then there's still the possibility of a quarter four rally. But don't just blindly assume that's going to happen. We need proof from the price action, and right now the proof from the price action is that we're in a downtrend heading to lower prices. So to the downside, watch that support at 410, and if we break that, we have the gap fill at 407, and then below that we have the next support at 404. Generally speaking, you're going to have a much simpler time trading with the direction of the trend, but in the short term, it is possible we're due for a bounce that could take us up into the 420s before we go any lower. On the NASDAQ 100 triple Qs, we were up 1.13% today, and we're trying to hold this support right around 347. And if you look to the left of your screen, that was the previous support back in May. And remember, we broke that previous high in the 330s, and we had this very nice parabolic rally. But unfortunately for the bulls, that means if we can't hold this support in the 340s, we're likely going straight down into the 330s. So this is a very critical support zone for the bulls, because if this does not hold up and we don't start bouncing immediately, we're likely coming down towards the 330s at the rising 200 daily moving average and the gap fill just above 333. If the bulls continue to push from here, we're looking for a push back up towards the previous breakdown, which is between 354 and 355. And because we are in the downtrend of lower highs and lower lows, it's possible that's our next lower high before we continue down lower towards the 330s. So just be cautious if you're buying the dip. Do understand you should be taking your profits at resistance because of the confirmed downtrend. And if you're shorting, manage your risk around the resistance levels. And as long as you're managing a risk, no matter if you're going long or short, you should be doing just fine. On the Dow Jones, we were up 1.55% today, and the Dow Jones is trying to bounce from this support zone down here in the 320s, even though we didn't fully fill the gap, and we are bouncing back up towards a resistance at the breakdown at 330 to 331. This could be the next lower high before we go fill the gap just above 322. Or if we continue to push higher, look for resistance at 331 and that negative 20 daily moving average at 333. There's a lot of work to do for the bulls to reverse this strong downtrend of lower highs and lower lows. So as I've said before, wait for confirmation of a trend reversal before you get overly bullish, which means if you are buying at support, be sure to lock in your profits at resistance until we confirm the trend is reversing. On the Russell 2000 IWM ETF, we were up 0.55% today, but we're still closing below 164, which is increasing the probability this bear trend is trying to go for the next leg lower just above 157. If the bulls can hold 164 and use that level as support, it is possible to get a push higher towards 170, but 170 would likely be a very strong resistance, which will not easily be broken. That could be a lower high before we head down into the 150s. Now, there is the possibility the small caps are trying to bottom, and this is a very impulsive rally to the downside. So if this is going to be a bottom, we're going to need to see that trend shift of a higher low into a higher high. So again, this is the theme across the indices, that we're in downtrends waiting for reversals. And until we see a reversal, we should be expecting lower highs and lower lows, because that is the current trend. On the ARKK ETF, we were up 0.56% today, but we're still closing below that support at 34.6, which is significantly increasing the probability we're trying to go down and fill this gap below 32. Just like IWM, this is a very strong downtrend, so don't get overly bullish. And in order to get bullish, we need to start putting higher lows and higher highs and break that resistance at 38. On the VIX, we were down 7.15%, and the VIX is trying to crush back down below 20, but we have no confirmation the VIX is crushing until it gets back down below 18. The longer the VIX is above 20, the more likely likely we're going to get a bearish outcome from the current price action, because that means fear is coming back into the market, and we should expect to see high volume panic selling if we're going to continue to see a fearful market. On Bitcoin, we're currently down about 0.25%, and Bitcoin is still trading below this resistance at 35,000, and this could be a bull flag developing, but it also could be a double top before a rejection and a breakdown back down to retest the breakout at 32,000. You can stay bullish above 32,000 because that's the breakout level, and as long as we come back to that level and hold it as support, that could be a buying opportunity. But if we slice right through it after the breakout, this could be a false breakout and we could be going lower. But if you look at the moving averages, we do have a very strong bull trend and we are staying bullish above 32,000. On Tesla stock, we were down nearly 5% today and we did hit the price target at 197. And I think 197 is likely going to be a critical support, which means if it's broken, that's extremely bearish and we're likely going down into the 180s. Now, if 197 holds and we start to see a reversal, that could be what takes us back up to test the breakdown at 230, and then above 230, we have the gap fill at 242. Don't just assume it's going to happen. This is still a very powerful downtrend that's only building up momentum. So if we start to bounce from here, you can manage your risk around 197, but if we break through that, we're likely still flushing down with high volume selling, and you can see today the volume is starting to pick up. So 197 is very critical, so manage your risks there. And if it breaks down, you will be able to short down into the 180s. On Apple stock, we were up 1.23% today, and Apple is bouncing off of that gap fill at 167, and it's finding resistance at the positively sloping 200 daily moving average just above 170. Really, what we'll need to see in Apple is a higher low followed by a higher high bounce, and earnings is going to be on Thursday of this week, so that is going to be a catalyst to move the price. If you want to stay bullish in Apple, manage your risk at the gap fill at 167, and if that breaks down, we're likely coming down towards 163 to 158. So jumping back over to the S&P 500, this is very critical because we are starting to bounce from a strong support zone, but we have no confirmation of a trend shift, so it still could be lower highs before the next lower low. So you'll need to manage your risk as bulls right there at 410, and if you're bearish, you're going to get another opportunity to try to short the market as we start bouncing higher towards 420 and then again towards 430. So we have very well-defined risk levels. Whether you're going long or short, you have very well-defined levels to manage your risk from. And that is more important than anything because nobody knows exactly what's going to happen from here or whether or not a bottom is in. But regardless of whether you're taking longs or shorts, just make sure you manage your risk around critical levels so that your risk is well-defined. There's going to be opportunities in a volatile market to make money in either direction, whether you like going long or you like going short, or if you're trying to do both. But just keep in mind the general direction of the current trend is downward. So if you are going long, don't overstay your welcome and be sure to lock your profits at resistance levels. It's a downtrend until it's not, and we're in a risk-off environment while SPY is below 420, so respect the current trend is in a very powerful downtrend. If you want to come crush this market, consider joining the Stock Channel Trading Discord community or Bank Trade Alerts, and you can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.